Hello, everyone, and welcome to the second edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and I'm joined today by Patrick Hawe. Patrick is a moderator in T3 Live's Pro Desk virtual trading floor and also a professional trader with T3 Trading Group. Hi, Patrick. Thanks so much for joining us today for this event.
Thanks for having me. Happy to be here. Excited to talk about markets. Love talking about markets, so happy to be here for sure.
Yeah. All right, so let's just start off with you so everyone that's here can just get to know you a little bit and why they should be listening to you. So, how long have you been a professional trader yourself, and how long have you been with T3 specifically?
Sure. So I would say I would consider myself to be a professional trader for my time with T3. Before that, I wouldn't consider myself a pro really.
Mhm.
So I've been with T3 since middle 2018, so it'll be going on like 5 years now. I've been actually trading, if you will, for probably like 9 years since middle of 2014. I started trading when Robinhood first really came about. I was back in, I forget how old I was at the time, but it was Robinhood coming onto the app market, like free stock trading. You didn't have to make an E-Trade account and go on your computer and deal with all that. It was very simplified.
Mhm.
So I really got into that. But obviously, I've learned so much at T3. What I thought I knew back then is nothing compared to now. So yeah.
All right, so before we get any further into your current week of trading and everything, I do want to just pull up some disclosures. So, as we talked about, Patrick is a professional trader with T3 Trading Group. So, he is regulated, and we do have to show these just, for everything. So, now we can get into our conversation about what's currently happening in the market. I do just before we get into that want to mention to everyone here that the chat is open for questions. So if you have any questions specifically for Pat yourself, put them in the chat. I will get to them later as we go through our conversation here. But we want this to be a collaborative thing with our audience as well, not just a conversation between me and Patrick. But okay, this has been a crazy week already. We're 3 days in, we're midweek, so we're checking in on how you feel about your week of trading so far. So if you had to give this week of trading a grade, what would that be and why?
Sure. I would say for myself, I'd give it a B plus. I think I've done a pretty good job this week with sticking to my game plan, following my game plan. I could have been a bit better. I'm definitely a bit of a perfectionist, which is something that's hard to be in a market because the market is a very imperfect thing.
Mm-hmm.
Um, but yeah, overall, definitely a B plus. It's not about making good trades or making good money, but if you have a good game plan, you stick to it, that's a good trade, I consider it. So following your game plan, following the rules, I did a good job this week. So
Okay. Okay. So as I mentioned, it's already been a busy week. We got the release of the January CPI yesterday. We got January retail sales this morning. Both of those reports coming in hotter than expected, and the market reaction to those was super volatile. Big up and down days yesterday and today. Did that surprise you, or was that kind of in line with what you were expecting personally?
yeah, I don't think CPI really surprised me. If anything, the economic numbers have been more surprising in terms of the retail sales this morning and then the jobs number. That was a huge beat that we got recently.
Mm-hmm.
Um, I wouldn't say either of them are surprising per se. Some people might be surprised at the market action overall, but yeah, not really too surprising. I don't think we're out of the time of like big surprises and big uncertainties. Things are a lot more priced in now, if you will.
Mm-hmm.
So yeah, I don't think there's any. We're expecting CPI 6.5 and we're getting 8.5, like a huge, anything like
Right.
that. So more or less in line. Yeah.
So, if you were to explain to someone the market action following yesterday's CPI, today's retail sales, kind of maybe, it's hard to explain why things happen, but if somebody were to ask you, what are your thoughts? Why do you think it was so volatile, so up and down? What would that explanation be?
Sure. Honestly, I would say that the reaction, I honestly wouldn't really consider it volatile.
Okay.
It was volatile for sure, but to keep things in perspective, we're coming off of a bear market, right? We're possibly entering a new bull market, bear market, whatever your definition is, recession, not recession, whatever your definition is, right?
Mm-hmm.
Um, the action over the past not day or week, but month plus now has been bull market type action where pretty much we go up no matter what. Either we go up off good news, we go up off bad
Mm-hmm.
news, or if we go down off bad news, that weakness is an opportunity and is bought back up. That's been happening for over a month now, which is very bull market like action. So honestly, even the past 2 days has confirmed that where strength has been there and where the weakness has been in the bigger picture, overall levels have held up. The market has held where it's needed to hold. So if you're looking at, just intraday, it seems a little bit volatile, but in the bigger picture, the S&P is fairly flat over the last week or so, which
Mm-hmm.
is a bullish thing we're holding in, right? Like we're getting these surprises, but the market's holding in. So yeah, as volatile as it's been, I think it's actually not been so volatile compared to what we're coming off. And still, are we still in a bear market? Are we in a bull market?
Mm-hmm.
Whatever you want. But
I
for right
think,
now, the action is the action, right? You gotta listen to the
right.
price action. The price action is bullish. It's been bullish. So that's what you got to go with for now.
I think what's important for people to get from what you were just saying is, you're zooming out. You're looking at things from that bigger picture point versus just zoning in on yesterday or today's market action, but you're looking at it in that bigger picture, which is important for traders to learn and to be doing. I see some questions starting to come in, so continue sending those in, guys, in the chat. I will get to those later on. I just want to get a few piled up there, and then Patrick will be ready to answer all of your questions as we go through them. But Pat, I want to talk about your trading plan this week. So you said you gave yourself a B plus. Um, you knew going into this week we were getting big numbers: CPI, retail sales. We still got more inflation data coming tomorrow with PPI, and some housing market data that can be kind of volatile for the market as well. So what was your trading plan heading into this week? We're midweek now. Have you followed it? And or if you haven't followed it, or if you had to adjust it, how have you adjusted it at this point in the week?
Yeah, sure. So, like I said before, month plus now of bull market type action, where pretty much any, strength is good, any weakness that's out there is getting bought up for the most part.
Mm-hmm.
And levels have held to the point where this market is in an uptrend now. We have broken the big picture downtrend. So we are in an uptrend. We're above moving averages that are sloped up. We're making higher highs and higher lows, which is an uptrend. So nothing it's very rare to have like a 1 day event that totally changes
Mm-hmm.
everything when market participants are buying for the bigger picture, right? Like big players aren't buying Google in one swoop in 1 day. They're spending days buying it, for example, something like that. So going off that, again, it's a bigger picture uptrend. We're holding levels. We need to keep holding levels, but so far we do keep holding levels. There's no reason to think we're not going to keep holding. There's no reason to think the trend is magically going to reverse 1 day. So the plan coming in to all these numbers is go with the bull market action that we're seeing right now, and go with that. So strength, you can not necessarily chase strength. I don't like chasing per se, but you can buy relative strength. And then any weakness that you see anywhere, look for weakness in quality names that are holding up overall bigger levels. For example, the S&P 4000 is a huge level that has needed to hold and has held for a bit now. So as long as that's holding, you can, buy the dip, right? Like people want to buy low, sell high, and where in a bull
Mm-hmm.
market, that's what you do. You look for weakness in quality names that are overall holding those bigger picture levels. So that was my plan, and yeah, I followed it. And like I said, I think I gave myself a B plus because
Mm-hmm.
I could have done better. I could have been a bit more aggressive. But yeah, so that was the plan overall. We're in an uptrend. The uptrend is holding. As long as that holds, look for quality to buy. And
Mm-hmm.
yeah, that's worked
Okay.
so far.
So I mentioned this already, but we do have more inflation data coming tomorrow, the producer price index. Now, the PPI tends to be a little bit less of a big market mover than the CPI, but the PPI is important because it's a leading indicator for the CPI in months ahead. As we all know, producers pass down those higher costs to consumers, et cetera, et cetera. So, based on how the CPI reaction happened and the retail sales reaction today, how are you approaching this next piece of inflation data tomorrow morning for your trading session tomorrow?
Yeah, so exact same way. If market's been holding strong today, I think was like a day 4 up. We can't go up forever, obviously.
Mm-hmm.
But although it's been a day four up, again, a little bit bigger picture for, I want to say, a week plus now, we're actually pretty much flat. It's been choppy, but flat and overall holding up. So I don't think there's any reason to think that the market's going to plunge below that key 4,000 level tomorrow off these numbers. So, I'm long some names. I'm not overly long. If the market goes up, straight up, those longs will work. If the market goes down, initially, look for some signs of strength in that weakness in quality to take advantage of that. So far, that has paid better this week, buying weakness in quality as opposed to trying to short, look for that breakdown. And almost every day now, this week, even today, yesterday, it looks like we were almost about to break down, but the weakness was bought back. So, same plan. SPY 405 is a low from the other day that's important to hold. Like to see
Mm-hmm.
that hold. 400 is a little bit more important. So, as long as SPY is above 405, I'm looking to buy weakness. Yeah.
Okay. So on top of inflation data that, we're getting this week, the market is also still digesting Q4 earnings. So we had some big earnings, some big moves happening yesterday after the market closed, big moves happening today after the market closed with those after hours earnings reports. What has been your strategy for this current earnings season?
So when you're trading, or I guess when I'm trading and I'm trying to gauge what the market's going to do, you
Mm-hmm.
really, any trader will tell you following the price action is really important. It's something that's simple to say, but kind of hard to explain.
Right.
But what I mean with that is looking how market participants react to numbers as compared to how they think they're going to react. So it doesn't, not that it doesn't matter like what a company reports per se, because it does, but all the time you see a company report bad earnings and it goes up and everyone's wondering why, or it reports good earnings and it goes down and everyone's wondering why. And it doesn't really matter if it's missing expectations. It matters who's buying and selling that stock, right? Like the big players that are
Mm-hmm.
moving it.
Mm-hmm.
So my game plan for this earnings season so far and still going forward is seeing the reactions to those numbers. And for the most part, that has also been a piece of this bull market puzzle that either stocks seem to either be going up or going down and then going up after. Like that weakness is getting bought up, whether it's bad numbers or not. MU is a name that comes to mind that was actually, I believe, the first chip semi to bottom. I believe MU bottom before any other semi, before AMD, before NVIDIA. And that's a great example that their earnings reports were not really that good over the past
Mm-hmm.
couple of quarters, but that stock has been bought up. It has been held, it is based out, and it's been bought up. So yeah, so just looking for the action in the names. As important as the numbers are, the price action matters more. So yeah.
Okay. So now I'm going to get to some of the questions that we are getting from our audience. So first one up
Mhm.
here is from Darren, and he says, as a percent of risk or percent of capital, what is a reasonable percentage of profit on a daily or monthly basis? What have you seen from others?
Yeah. Could you read the last part of that question again?
Yeah, what is a reasonable percentage of profit on a daily or monthly basis? And what have you seen from others other than yourself?
Sure. So I don't think you should have profit targets or percent targets or anything like
Okay.
that. You do need to manage risk on the downside.
Mm-hmm.
I like to look at every trade as an individual trade as opposed to having like a daily profit target or a weekly profit
Mm-hmm.
target or something like that. Because every trade is its own specific special situation in a way. So if you're having a profit target, you could be taking off a winner that there's no reason to take it off, right? Um, if you are, capping yourself to the number of trades and you have a trade line up where everything is saying you should be in that trade, you should buy that trade, you're a trader, that's your job, follow that trade, right? But you have this rule that's blocking you, you're going to cap yourself. So I don't think really it's about the upside. It's more about the managing the downside as well as the
Right.
risk reward. If the risk reward is there, and your execution's good over the long run, the math will add up, right? If you're risking one to make two and you're right half the time, you will make money in the long run.
Mm-hmm.
So yeah, just it's not really so much the upside, Although you have to still have upside targets, you have to have an idea of where the name might go.
Mm-hmm.
But yeah, manage the downside risk and have good risk reward and somewhat probability, somewhat of an edge on your side. And
Mm-hmm.
yeah, the math should work out in the long term. I've
Oh.
definitely, my biggest days, my best days have been numbers where like I didn't plan on it being that big of a number. I just followed
Mm-hmm.
game plan. It just happened. 10 out of 10 things happened to work well that day, which usually doesn't happen, but it can happen. So
Yeah. Okay, our
yeah.
next question is from Franklin. He says, if using the 8 times initial capital contribution to buy blue chip equities, you still with me here?
Yeah.
Would you be able to hold a position for up to 30 days? So, for example, could you buy and hold, say, 200 shares of a stock like Tesla while possibly day trading other stocks?
Yes, you can. So I assume this is like a prop trading question about T3 specifically. Sounds like. Yes, you can.
Possibly, yeah.
So yes, you can, but again, you have to manage risk, right? You only have so
Mm-hmm.
much capital in your account. If you are you like leverage is a very dangerous, it can be a curse and a blessing at the same time. If
Right.
you're managing your risk and you are, trailing and following your game plan, the leverage can pay you, but you have to manage that downside risk. So yeah, you can hold as many positions as you want. You can lever up as much as you want, but you have to control that downside risk. And if you don't, it gets ugly very quickly. So yes, you can do that, but manage your risk for sure.
Okay. Our next question comes from Eric. He says, if you're swing trading and the previous day's move was extremely high, where would you set your stop loss the next day? Would you still set it at the low of the previous day candle, or would you find another price level to exit? What would be your personal strategy?
Yeah, good question. It depends, I think, on the situation.
Okay.
So whatever your out is in the beginning should, be your original out until you get that move in your favor. So if it's the low of that day and then the day ends up being good and you have a profit cushion, or you're buying versus, a base, a stock's been basing out for a week or a month or something like that, you're buying versus that base level. Keep that. But then if so, say you're buying with $1 risk and you think this could move $3 in your favor, and that day it doesn't really move in your favor too much, but it's still holding the level, keep that out because that out hasn't been negated. There's no reason to get out. If you think it's going to go up that day and it doesn't, but it doesn't stop you out either, there's not really a reason to get out, I don't think.
Mm-hmm.
But say you're risking one to make three, it goes up 2.5, it doesn't get quite to that three, then you want to, it becomes more kind of money management risk reward trailing,
Mm-hmm.
right? So sure, you didn't get that full, that full measured move that you're looking for, but at the same
Mm-hmm.
time, you're risking one to make three, you got 2.5. It doesn't make sense to give back 2.5 to make 50 cents, right? To make 0.5, like
Right.
that math, that risk reward doesn't make sense. So leave the out there, but if you get that move or close enough to that move, manage your money. Don't, you know, you want to risk one to make three, but then you don't want to give back two to make one. That just doesn't make sense. Give back one to make another one or two, sure, but so yeah, it depends on the situation. I think a little bit. Money management and actual trailing stops kind of collide a bit. The rules collide a bit. So
Yeah.
yeah, that helps. It's
Okay.
definitely not like a black and white answer for sure.
Right. Very few things in trading are a black and white answer, and everything, of course, has to do with your own personal risk and what you're willing to take on, et cetera, et cetera. So we're
Right.
halfway through the week. It's Wednesday, so you got 2 more days left of trading. Are you making any adjustments to your strategy for the rest of this week? And what are you specifically looking at heading into the Thursday and Friday session?
Yeah, so I guess the main thing is PPI, like you said, for tomorrow morning. Definitely a busy week for earnings as well. Just a lot of names, nothing too big. Nvidia is next Wednesday, I think the 22nd as well, so that will be important.
Mm-hmm.
Overall game plan for this week was to be bullish. So far, that has paid. I think today is like a day four up. So going forward, you still want to be bullish. You don't want to flip from bullish to bearish. We're in a big picture uptrend.
Right.
But the time to be, we had the market weakness. Now we're on like a day four up. We've been bouncing pretty well. So be a little more patient and cautious. Just because we have gone up doesn't mean we need to come back down, but we're more likely to either go sideways or down than keep pushing, pushing, pushing. Doesn't mean we can't
Mm-hmm.
keep pushing up, but so yeah, so still bullish, but a little more cautious, a little more patient now. And I'm always open-minded two ways too. Just because we're uptrending and it's a bullish market doesn't mean I'm not going to short. Happily will short if the signal calls for it.
Yeah.
So yeah, so just a little bit more patience now. Overall, again, it's a day four up, but bigger picture, we're kind of sideways for like a week
Okay.
now.
Right.
So yeah.
Yeah. Okay. Our next question comes from Ernest. He says, first of all, thank you for putting yourself out there and having this conversation with all of us. And I second that. But would you address your thoughts on trader behavior and how you align yourself with the markets as the conditions change from bear to bull and trending markets? Are there any specific examples that you could cite as to how you are able to keep yourself in the right mindset to trade during times of volatility?
Yeah, I think the best answer, I could give a ton of answers to that. I think the best answer I could give off the top of my head would be respect your levels. So
Okay.
technicals and charts are very important. People, I think, overread charts to where they think a chart moves money, but a chart doesn't move money. A chart is just a picture of the money moving. Um, so respecting your levels is something that is sounds so simple to do, is harder to do in real time when you're actually trading and the emotions are going through, and you're feeling good and you're feeling bad. But usually, again, like if you're taking a trade, you're risking whatever to make whatever. You're buying versus a level, you're buying versus a base. You have some type of out. You always have to have some type of out, even if you're out zero, because you're thinking whatever, this company's not going
Mm-hmm.
bankrupt, but you have some type of out to manage your risk.
Right.
And so I'm losing, trying to like explain. So basically, what I'm trying to say is all the market moves this way and that at the end. It could start in the morning, end at the end of the day, and it feels like a week's gone by. But
Right.
know your levels, and usually at the end of the day, it's either going to be above. It's either going to be above the level or below the level. So oftentimes I see people, they're struggling. Like, I hate losing money on a trade that works, right? Like, it's one thing if I
Mm-hmm.
have an idea, it doesn't work, I was wrong, and I lose money. It's another thing to have an idea, have it work, but I still lost money on it somehow because I didn't trade it right.
Mm-hmm.
And usually back, you can say, well, I got shaky. I was buying versus this level. It went down below the level. I got stopped out, but it went back up over the level and it ended up finishing higher.
Right.
So bull to bear market, uptrend, downtrend, whatever. Find those key levels, find those important levels, find those inflection points. And if it's above, good. If it's below, bad. And that's it, really. So now a lot of people are probably a bit frustrated because it is more bull market type action,
Mm-hmm.
although we're still coming off a bear market. Are we in a recession? Did we already have a recession? Are we gonna have a recession? But the chart is in an uptrend. The levels are holding. Again, this past week has been a week of, I've seen, I think, a lot of bears frustrated, a lot of people confused with how strong the market is, but levels have held. There hasn't even really been a shakeout, honestly. Like intraday, yeah, but daily picture, there hasn't even really been a shakeout.
Mm-hmm.
So it might be annoying. You might be a bear and you might think the market's going down, but levels are holding. We're above the levels, so that's just it. Just keep it simple like that.
Yeah,
Um,
just
the
respect that.
simple answer is
Yeah.
much more, again, difficult when you're trading and you're getting stopped
Yeah.
out and then going back up through the level, and it's hard to believe it, and it's painful. But more often than not, those uncomfortable trades usually end up working best, honestly. So yeah,
So you
hope that makes
mentioned,
sense.
what bothers you the most is when a trade, you traded right, still didn't work out. And, that's a big thing of what makes a bad trade, what makes a good trade. It's not always the profit, it's not always the money. It's usually about the strategy and the plan. So I want you to tell me about the worst trade that you've had this week, what went wrong, and what makes that the worst trade you've had this week for you?
Yeah, sure. So the basically that exact thing happened to me this week with MU. I was trying to go long Micron and did go long Micron, and after I forget what level it's at after today, but I should have stuck with the trade. But basically, Micron's been a great value chip name and has honestly been a semiconductor leader. Again, that bottomed
Mm-hmm.
before pretty much every other chip. That was basing out around the 60 level on the daily chart. I was trying to work that base. It pushed me out of that level on, I think, Monday morning. And then by either the end of the day, Monday or Tuesday, it went back up through that 60 level. And I didn't get back in. And again, it's not about, I'm always careful with telling people, I don't encourage like fighting trades or anything like that. But
Mm-hmm.
Micron 60 is the level. It went below 60, it pushed me out, but then it went back up above 60. It's good above 60. It went below 60. I'm out, but it went back above. Why am I not getting back in?
Mm-hmm.
So that's something where, again, like I ended up not really capitalizing on an idea I had that worked because I didn't fully focus and fully stick to that game plan of if this is over 60, I want to be in this.
Right.
So yeah, happens.
All right. And then on the flip side of that, I want to hear about the best trade you've had this week and what made it so good for you.
Yeah, best trade I had this week was going long Google yesterday, and I actually sold all of that today, or the rest of what I had.
Okay.
And that was a similar, pretty much the same situation, but I stuck to the game plan, and I mean, it worked out well too. It didn't really try to push me out too hard. It was hard to buy it yesterday. It was uncomfortable to buy it, but that's kind of when I like to do it in a way. That's when
Mm-hmm.
I feel like I really have an edge. When no one wants to own a name, that's probably when you want to think about owning it. Um,
Okay.
so yeah, bought it, respected the levels, added through the levels that I wanted to add through, kept my outs, gave it the proper room that I needed to give it, and it ended up working out the way I planned it to. Follow the game plan. Game plan worked. So yeah, that was
Mm-hmm.
good. I got paid on that one.
Yeah. And so for everyone listening at home, just a reminder that, what made Pat's worst trade the worst trade is because it didn't work out he followed the plan and it didn't work out. And what makes the good trade is because he followed the plan and it did work out. So it's not necessarily about money lost or money gained, but it's about following that trading plan. And that's so important for traders to understand. So I do have a follow-up question from Franklin. He asked us earlier about holding a trade and day trading when it comes to T3 specifically. So he says when he was prop trading back in 2002 to 2004, they only day traded and sold stocks like 50 cents up. Nowadays, the market is structured so differently. So do you trade a lot of longer time frames at T3?
Um, I trade every time frame.
Okay.
I think who you had Derek on your show last. I think Derek could answer this a little bit better just because he was trading in that time of the market where from what I understand, I wasn't trading at that time, but from what I understand, there was a lot more tricks to the market with like tape reading and using
Mm-hmm.
size and having tight stops and everything like that. But the market adjusts over time, and Derek will be the first one to tell you that those types of trades just don't really exist anymore.
Mm-hmm.
So it's not necessarily longer. I wouldn't say it's longer time or anything like that. It's just based on different factors. It's a lot more based on charts for me, and I
Yeah.
think for a lot of other people now. Whether that's a 5 minute chart or a weekly chart, pick your time frame. But yeah, it's not really the time so much as just, why. I'm buying something because this level on the chart is holding. I'm not, versus back then it might be, oh, there's a big buyer on the tape, so let's buy versus this big buyer. But that's not really a thing anymore. So
Mm-hmm.
yeah, I hope that makes sense.
So our next question comes from George. He asked if you have a written, detailed trading plan that you consistently refer back to.
Uh, Yeah, I wouldn't say it's detailed. It's more like a sticky note on my desk. But I do try to write things down for sure. I used to do that more, and now it's a lot more in my head, honestly. But
Mm-hmm.
I do try to write it down whatever helps you follow your game plan. I used to all the time like write or have a game plan in my head, and then the market opens, ding ding ding, and I might as well never have even thought of that, and I'm trading something like totally random. So
Mm-hmm.
I try to do it. It's not, you know, it's whatever works for you and whatever helps you as a trader. So I write down little sticky notes to remind myself to follow my game plan, or remind myself of what names I'm looking at. So I trade the right names and I'm not just trading a random name all of a sudden 2 minutes after the open.
Mm-hmm.
So I guess I kind of do, but
Yeah.
not too deep.
I think
But
so much of developing a trading plan, especially for new traders, is learning their own themselves personally, what they can handle.
for
If they
sure.
need a sticky note to remind them, like, hey, you're supposed to, this is your stop level, this is what you need to be caring about. If they, don't need to write things down. And as you trade and it becomes a more second nature thing, that might change. But really learning yourself and not necessarily basing what you do off of what you've seen someone else do successfully, like realizing that everything is an individual thing for every trader.
Yeah, if you are trying to do something that you think you're supposed to be doing, but you're like really not comfortable with it, you're not managing your risk well, the game plan is not it's you don't fully have a game plan if you're uncomfortable with it. If you
Mm-hmm.
have a full game plan and you're still uncomfortable, you're probably risking too much. It's easier said than done. I am not like just a cool cucumber all the time for sure. I definitely get mad all the time, but in theory,
Yeah.
if you have a game plan, you pick what you want to risk, that's the game plan. There's no reason to get emotional really. Just it is what it is. You have your risk reward, you have your probabilities. Most of the time it should work, some of the times it doesn't. But yeah.
Okay, our next question comes from Joseph. He asked if you use the book order flow level 2 to day trade, and if so, how do you use it?
Yeah, so I don't, I mean, I do have a level two and I do watch the tape. And honestly, even though I use charts mostly, when I'm actually
Mm-hmm.
entering the button, I am watching the level two in the tape. Um, but no, not, and that goes back to that other question and the old example with Derek and, tape, like size trades off the tape and big institutions showing all their size and, stuff like that that just doesn't really exist anymore.
Right.
So not really. It's much more. What I use is charts and multiple time frames. So I don't
Okay.
like use one 5 minute chart all day. I use a 5, 15, 30 daily, weekly, all the time frames all together. What are they all telling you? Are they all telling you the same thing? Are they telling you different things? So yeah, that's more of what I look at throughout the day. Is the multiple time frames all at once.
Okay. So our next question comes from Malika. She said her question is, what strategy? This might not apply to you because I'm not sure you do option. Do you options trade?
Not as much as I used to because I'm
Right.
a prop trader now, but I do know a
Mm-hmm.
lot about options. I
Okay,
like to
so we'll
think
talk
so.
about it. Okay, so she says, what strategy do you use for options trading? If you're expecting a certain stock to go up and it goes low, how do you strategize to minimize your losses? And then how do you interpret if the stock is going to go up or down? So it's kind of a
Yeah.
three-parter there.
So obviously everyone can trade however they want to trade. Personally, so I used to, that's all I traded before coming to T3 was options, and
Okay.
most retail we find trade options because it's just the natural leverage there. It's a lot cheaper to buy a weekly Apple
Mm-hmm.
call than it is to buy 100 shares of Apple. Um, Personally though, just from like my wins and failures and overall mostly failures of options trading, which for the most part, day trading options, most people do fail at that. um, I think that options should be double or nothing plus. I don't think, and this is just me and my experience, but like day trading an option to make 30% on it, is just so hard because you're gonna have those days where you hit the 30%. You're gonna have the days where you lose 50% because the stock went down or more. You're gonna have those days where you lose 10% because the stock went sideways all afternoon and you got eaten
Mm-hmm.
up with time decay. Um, so if so, manage your risk, right? It's very hard to have have a 20% stop loss in something like an option intraday. It's
Mm-hmm.
much more, it's going to end up being 25%, 30%. It's not going to be exact. So I'm not saying like risk everything, risk the premium to zero or anything, but I think that should kind of be your risk on options, and you should be going for double or nothings. And if the option doubles, then you get to play with house money. You can sell half, and then it's the house money. But the
Mm-hmm.
bigger wins, like you don't want to be in a Tesla call in 5 minutes and make 20% on a Tesla call. In my opinion, you want to be in a Tesla call for a week and have that 5x or 10x.
Yeah,
That's how I view options. In the long run, the day trading for 10, 20% here and there, I think that's really hard to manage the risk on that.
totally.
So that's how I view it.
Okay. Our next question comes from Eddie. So I'm gonna go through this here really quick. He says, thank you for hosting, and he agrees with your analysis on bullish trend as we're trading above the 200-day moving average. He said he noticed the volume crushed significantly after CPI yesterday, or volatility rather, excuse me, not volume. Both VIX and VVIX trending down hard. So was the ATM options PC ratio coming down. The inflation fear seems to wane away in the market despite both CPI and retail sales coming out way hotter than expected. So would you project to have VIX stick around 18 to 19 level, or would you expect it to keep trending down with the market clawing back up as we're in that bullish trend?
If I had to pick, I would expect it to keep trending down.
Mm-hmm.
And I would say if you got into a 16 handle for the VIX, then we would probably be more aggressively looking for a VIX bounce. I would say it's a little bit 50-50 ish here, but the trend is your
Mm-hmm.
friend, and the trend is up, right? So most likely down. Over this past month plus of this bull market type action that we've been seeing, we keep getting, again, like it seems we either go up or we go down and then up. And we keep getting
Right.
these events that come up where like VIX, basic risk is elevated into the event. The event passes, the world doesn't end, miraculously once again, and then
Mm-hmm.
the VIX comes down and the market seems to find a bit, and like that fear is gone. It's just like that.
Yeah.
Oh no, like the number's coming, and then the number comes, and it's not the end of the world, and that's just
Or
like
the
what's been happening.
anticipation.
Right, exactly.
Yeah.
That's what's been happening. That definitely won't last, and that will change in the future. But that's what's going on right now. So yeah, I hope that makes sense.
Okay. Our next question is, what is your perspective on supply and demand trading as a strategy?
I would love a little bit further clarity on that question. But supply
Okay.
demand, I mean, is everything really. I mean, the market goes up when there's more buyers and sellers, and the market goes down when there's more sellers and buyers. And that goes back to why like price action is king over what where stocks should be trading or wherever. A stock's trading where it is because that's what a market's a market, right? That's what makes a market. So um, it's a supply demand again. If a name has terrible earnings and the name goes up, it's
Mm-hmm.
because there's more buyers and sellers, and
Right.
that's big money moving that name. So whatever that name
Mm-hmm.
is, right? So,
Yeah.
yeah, supply demand. I mean, more. Why is the stock going up? Maybe the number is bad. No, there's more buyers and sellers, and that should tell you something that even though those numbers are bad, there's more buyers and sellers in that name. That speaks in itself.
Right. I'd
Uh,
say supply demand, maybe not a strategy for trading, but more a piece of information, or to use that as a piece of information for why a stock may be moving and whether it's,
right,
underlying fundamentals, or hey, there's just more buyers than sellers right now. And that's not
right,
necessarily a sustained trend in that stock.
right. Yeah. The supply demand thing, you could talk a lot. You could go into big deep conversations about that's the reason why the market's always trended up in the history of forever is
Right.
because supply demand. You could go on and on about that. So yeah.
Totally. So Abdul's question is for you personally, do you have any favorite ticker to day trade, like SPY or Tesla, Nvidia? What's your kind of like go-to stock if you have one?
Yeah, probably not a good go-to. If I had to pick one, it'd probably be Apple.
Hmm.
Um,
Popular
if I had,
answer.
I'd probably rather pick three though, and those three I would
Okay.
probably pick Apple, Tesla, and Nvidia. They're a bit higher beta, but they still move with the market. Usually, like those are good day trading names. We always talk about that. Um, if some random name is in play that day, it can be a good trade that day. But
Hmm.
if a name isn't in play, you don't want to just go be trading this random small thing. If it's not in play, there's no reason for it to go up. It's not market correlated, anything like that. But even if the market's just choppy and kind of moving around a little, at least in my opinion, like an Apple, and Nvidia, Tesla, those three off the top of my head, those will still move a little bit. You can still
Hmm.
kind of get some movement there.
Those are your
So yeah,
higher volume on like a day, your higher average daily volume type stocks.
right, yeah. But I definitely don't trade those all day, or not all day every day. I definitely don't trade those every day.
Yeah.
But yeah, if I'm going like if the market's correlated, if I want to do something with the market, probably one of those. If not, just like spies and Qs and IWM.
Hmm. So you said you've been trading with T3 since 2018, right?
Yep.
Okay. So Eric's question is what are the key things that made you a profitable trader, and how long did it take you to find consistency?
Yeah, good question. It definitely took me over a year, if anything, maybe even 2 years, to really break through. And I always say it takes that long to people because I just think you need to experience trading and everything for yourself. Um, it's one thing to be a scholar and look in history and read about things, and it's another thing to really be involved in the market when different events are going on and the world is developing, basically. So you can know what a bear market is like or what it is, but until you've traded, like a real up market, a real down market, a real sideways market, you just don't have really all the pieces of the puzzle there. And
Hmm.
then you just over time kind of learn what's going into it. It's not just the stock market, but it's the bond market. It's the flow of money in between these markets that's really moving everything. Um,
Hmm.
so yeah, it took me years for sure. I'm still trying to get better. Definitely, I'm like
Hmm.
not a phenomenal trader by any means. I have a lot of improvement to do, and I have a lot of bigger goals. Um, but yeah, I mean, it takes time while you're learning. I guess the key is just keep the risk down. Don't
Hmm.
try to get rich when you are learning how to trade, because once
Yeah.
you figure it out, it's a scalable business. So in time, once you get better, you can always scale up in what we're doing
Right.
here. You can, so yeah.
Exactly.
It takes
Totally.
time though.
Um,
It takes a lot of time. A lot of time. It's not going to be a month. It's just you're not. You could have. It's just not going to happen. Like you know what I mean. You need to see it. I really think you need to see every type of market and participate in it, before you really
right.
figure it out.
Well, because you
So
never
yeah.
know what your personal reaction to your personal risk in a bear market versus a bull market will be. Just as, for
Right.
example, people who started trading 2020, 2021, all they knew was a bull market. And then the
Right.
adjustment had to come with the bear market. And now it's the first time they're getting out of a bear market. And so
Right.
finding all of that, learning that about yourself is important. Our next question comes from Ernest. He said, "Thank you again for taking these questions. And so, would you please tell us what was the biggest hurdle for you to overcome in becoming a consistently profitable trader? Uh, was there an experience, something that you read? Did you have an interaction with a mentor that became some like defining moment that stands apart for you in this journey?"
Um. Definitely shout out to Derek. Great mentor. I've definitely learned a lot from
Mm-hmm.
him. I think one of the biggest things I've learned from him is definitely following your game plan. Managing risk is very important. I think I feel like the majority of new traders, the first thing they really struggle with is managing risk, but then the second thing they struggle with and it almost naturally comes from that, is riding winners and maximizing reward.
Mm-hmm.
They won't manage risk, and so they'll, blow up right away. They'll learn to manage risk, but then they'll be so like scared of the risk that they're cutting things too fast and not letting their winners run, basically. Which letting your winners run is easier said than done, but like I was saying before, just you have your out, you have your levels, you have your game plan, respect it. If it doesn't stop you out, there's no reason to get emotional, just follow your game plan. And that was that's, I think those like big up days is when you really start to break through with, again, it's not every day, it's not every other day that 10 things are going to work and everything's going to be
Right.
great, but it will happen eventually. It's just a matter of probability. So once
Mm-hmm.
once you like see that work, it's almost like you come to light, like, okay, like I can do this, this is possible, this
Mm-hmm.
isn't a rigged game. It's, it is a rigged game, but it's not rigged against you. So
Right.
yeah.
Yeah. Okay. And then Robert, he said I see so much lately about VWAP trading strategies. Is that something that you use regularly? And if so, do you have any recommendations for books or courses on it?
Uh, don't have any recommendations for books or
Okay.
courses. VWAP, I use intraday VWAP. I don't use
Uh-huh.
multi-day or anything like that. VWAP
Right.
is a study. It's a technical indicator. It's a layer of probability. That's all it is. It can be important for some people. It can be not important. It can be very important and be the crucial point all day some days, and some days it can just blow right through like it's not even there. So it's like any other technical indicator, whether it's a moving average or RSI or Fibonacci or whatever. It's
Mm-hmm.
just a layer of probability. That's just how I view it. So you can know where it is, but that's not the only thing that should go into a trade. It should be
Yeah.
also just based around the chart, based around the levels. If that VWAP is above a bigger level and the VWAP's holding, then that could be something. But yeah, it's a layer of probability. It's not the only thing that goes into a trade. That
Okay,
makes sense.
everyone watching, this is kind of your last call for questions. So if you have any more questions for Patrick, please submit them. In the meantime, my next question is about you and your goals. So, what are your long term goals for this month, this year of trading, and what is the strategy you're using to achieve those goals?
Um, long for me, my goals at this point are to just scale up and become a bigger trader that I know I can be. Um,
Mm-hmm.
so just scaling up is very hard to do. It's very hard to do. I feel like most people will tell you that when you try to scale up is when you have those big down moves and you kind of gotta take it a step back. Um,
Mm-hmm.
that sometimes naturally happens though, because you'll go on a run with the market, increase your P&L, scale up, but you're scaling up after the market just went on a run, so you're kind of doing it at a bad time. Which is why right
Mm-hmm.
now my game plan going forward for the rest of the week is to be a bit more patient, because I know the market just had a nice little week and stocks made some nice moves. So now let's not push it. Let's take a step back. And the game. So to get to those goals is just following the game plan, just being disciplined. You have to be disciplined. Um, Trading and life lessons often go together. Honestly, it's the same thing with
Yeah.
life and right. Like you got to be disciplined. So I know what I have to do. I just have to do it.
Right.
Simple as that. Really easier said than done. But yeah, it's really it.
So you are a prop trader with T3 Trading Group. So you do this professionally day in and day out. So for everyone watching I to kind of take us through what a day in the life of Patrick Hawe looks like. What are you doing on a day-to-day basis as a professional prop trader?
Yeah, sure. So I wake up in the morning, uh, go to my computer probably earlier than I should be, but I pretty much go straight to my computer after I wake up.
Mm-hmm.
Log in, do everything I need to do in the morning. Everyone has their morning, get their coffee and everything like that. But log in the morning hours leading. So we do a morning meeting at 9 a.m. with Derek before the market opens at 9:30. So
Mm-hmm.
the
And just
hours,
quickly
couple
for
hours.
everyone that's in the he again, Patrick is a moderator in the ProDesk virtual trading floor with T3 Live. So that's where these morning meetings are happening. That's where you can work with him and work with Derek Oldensmith as well. So, okay, continue. So you have your morning meeting, or you get ready for your morning meeting.
Good plug, yeah. So, yeah, a couple hours leading up to the morning meeting, I'm just researching, reading everything from, I usually start with like the macro overnight news and then the stock specific overnight news and then sell side analyst research upgrades and downgrades, and basically it takes me a couple hours, but putting together all the information I can possibly get my hands on into, okay, why is the market here right now, coming into this morning? So research, figuring out the game plan. You can't be waking up at 9:29 and trading at 9:30. It's just not gonna happen. It's not gonna happen. So preparing for the day, morning meeting at 9, figuring out really what I want to trade for sure, what I like best. My list every morning will be anywhere from 1 name to 5 names to 10 plus names. So sometimes if it's a lot, I got to figure out what I really want to focus on off the open, pick 2 or 3. And then, market opens and pretty much active all day from open to close, watching the action, watching options flow, watching breaking news, everything like that. During the middle, I have some other side jobs at T3 as well. So, in the middle of the day, if someone comes to T3 and they need help with their platform or something, I'll be the guy to help you. Little things like that. So phone calls and meetings throughout the day, like everyone has in the middle of the day. And then, market closes. We do the afternoon meeting, which is like more of a review type session in our ProDesk room. And then after that, more just personal reflection on what I did right and wrong. I don't really write in journals so much anymore. But just personal, personal
But you
reflection
take
on the day.
that time every day to reflect, at least with your job.
For sure. I look through the charts and I review, and hindsight, I could have seen this and could have done that. And I know there's no shoulda, coulda, wouldas in trading, but again, reviewing charts, you learn, charts make patterns and patterns repeat themselves. So over time, seeing those and recognizing something that you could have seen, you'll probably see it again in the future, and you'll be able to recognize it in real time and take advantage of it. So.
Okay, and we have another question
busy
from
days all day, every day.
Yeah. So our next question is from Abdul. He said, what tools and indicators do you use almost every day for day trading, especially at the open?
Yeah. So I use a lot less technical indicators than I used to.
Okay.
I use moving averages. I have an 8 and a 21 EMA, 50 SMA, 200 SMA. I use RSI on a 5-minute chart for intraday kind of extremes, and I like to go counter trend when things get too extreme. Honestly though, I truly believe that all I need, or all anyone really needs, is maybe 1 moving average and volume, and just multiple time frames. Multiple time frames is the most important thing. So where is it compared? Pick your ADMA. Where is it compared to its ADMA on its daily chart? It's 30, it's 15, it's 5, combining all that together. That's honestly it, really. So, if the 5 is too extreme and the daily's too extreme and everything's too extreme, that sets up for something the other way. If the 5 is too extreme, but the daily looks like it's breaking out, you're probably you're going to avoid taking that short on the 5 because the daily looks good. I use like Bollinger Bands and stuff like that too, but I honestly don't need any of it. I honestly think all you need is multiple time frames. That's like all you need, really. So.
Okay. All right. So I think we'll wrap things up there. Thank you, Pat, so much for joining us for this edition of Conversations with a Pro Trader. For everyone watching, I did just drop in the chat the link to register for our next event. That will be happening on Tuesday, February 28th. So a little less than 2 weeks from now, with Scott Redler, who's also a trader with T3 Trading Group and runs one of T3 Live's virtual trading floors. And so that'll be interesting. But for everyone, Patrick will be back in the future. So this is not the first time or the last time you'll be hearing from Patrick and myself. So keep those questions coming, keep thinking of them. And if you want to work with Patrick, check out the Pro Desk or contact T3 Trading Group. And you can also, Patrick, is it okay if anyone,
Sure, you won't regret it.
Is it okay if anyone reaches out to you personally here on LinkedIn as well if they have any interest?
Yeah, definitely, for sure.
And you can reach out to me as well. I can connect.
Not message you back in the first 5 minutes that you message me, but yeah, definitely anyone feel free to reach out for sure. Happy to.
Yes, and anyone can also reach out to me as well. I can make that connection. I can help there as well. So thank you so much again, Patrick, for joining us. I hope to see everyone back here on February 28th with Scott Redler. Thanks, guys.
Great. Thank you. Appreciate it.